This is today's Daily Market Comment by Raf Boyajian. I'm Christina Marujos, and thank you for joining us at XM.com. Global stock markets sank deep into the red on Tuesday, extending Monday's losses, with U.S. equities likely joining the sell-off today when Wall Street traders return from a long holiday weekend. U.S., U.K., and European leaders are set to announce fresh sanctions on Russia after Moscow said it will recognize the independence of the two breakaway regions of Donetsk and Luhansk in eastern Ukraine. But the escalation didn't stop there, as President Putin ordered Russian troops to enter the separatist regions for peacekeeping. While diplomatic hopes for a solution have not been completely dashed, it's difficult to see how Russia could step back from the brink of war with Ukraine following the developments of the last 24 hours. The intensifying crisis has sent Russian stocks spinning lower, while the Russian ruble has gone into freefall, plunging to a near 16-month low to the dollar. In the rest of Europe, the major indices opened more than 2% lower, but then started to pare some of their losses by mid-morning, signaling a slight easing of the panic. Stocks in Asia fell across the board too, and U.S. stock futures are pointing to a third straight session of losses for Wall Street's leading indices, with Nasdaq futures down the most. Fears that a full-scale military conflict could disrupt oil and gas exports from Russia are driving the rally in energy prices. Brent crude futures are on the verge of hitting the 100 per barrel mark, while WTI futures have surpassed $95 a barrel. Some metal prices like aluminum and nickel also climbed strongly on concerns about Russian supply. Gold, however, was struggling to make a clear break above $1,900, pulling back after brushing a 9-month peak. The gains in commodities markets bolstered the commodity-linked Australian, Canadian, and New Zealand dollars. All three were also up against the Japanese yen as the safe haven currency retreated from earlier session highs. The US dollar, however, was mostly flat as the euro and pound also mostly kept within their recent ranges. The crisis in Ukraine has sparked the scaling back of some of the more aggressive Fed rate hike bets by market participants, undermining the greenback. This was the Daily Market Comment here at XM.com.